听见资本本期视频为您带来的是摩根士丹利在3月18日亚洲闭门会关于 TMT 的关键内容。这场会议深入探讨了半导体设备、存储器市场、AI 硬件和 PC 市场的最新动态。会议内容干货满满，直击行业热点。首先，日本半导体设备市场备受瞩目。渡边先生提到，尽管 3D&A 资本支出复苏缓慢，但后道设备需求依然强劲，尤其是 Screen 的单片清洗系统表现抢眼，工厂利用率高达 86%， 显示出市场对高性能设备的依赖。同时，台积电在面板及封装上的技术调整也为 Screen 和 DE-Score 带来了新机会。存储器市场方面 ，Daniel 对 Winbank 和 Basin 的乐观态度引人关注。他指出，消费级存储器价格回升，尤其是 Winbank 在晶圆叠晶技术上的突破，为边缘 AI 应用提供了高带宽、低成本的解决方案，未来增长潜力不容小觑。AI 硬件领域 ，Sharon 分享了 AI 服务器机架出货的最新进展。英伟达 GB200已经量产，市场需求旺盛。他特别提到 Delta Electronics 在电源和液冷技术上的优势，展现了 AI 硬件供应链的活力。不过 ，iPhone 需求因 Siri 升级推迟而下调，组装量调整也反映了市场的不确定性。PC 市场则呈现复苏迹象。Howard 谈到 Winmin 和 Gold Circuit 的积极动态，笔记本电脑出货虽有波动，但新款显卡量产和 Windows 11升级有望推动增长。金像电子在巴贝尼基 PCB 良率改善后，营收预期也有所上调。最后 ，Derek 对 BaseLink 的新覆盖让人眼前一亮。他认为 AI 部署和供应链份额提升将推动其营收快速增长，尤其在有源电缆和半导体设备线缆领域的布局，未来2年表现值得期待。接下来是英文会议的全部内容。如果您需要英文原稿和我的投研助理人工校对的中文文本，您可以在频道的 Patreon 上获取。
Good afternoon and good morning, everyone. It's March 18th, Tuesday. Welcome to Morgan Stanley Asia TMT webcast. My name is Sharon Shi. Please note that this event is for Morgan Stanley institutional clients and the financial advisors only. This event is not for members of the press. If you are a member of the press, please disconnect and reach out separately. Please note that this webcast and your question may be recorded. Today, we also have a strong lineup. We have Wataki-san from Japan semi-equipment team. We also have Daniel Yan from the Greater China semi team. We also have Hao Gao and Derek Yang and myself from Greater China technology hardware team. We will have a few topics to be included today. We will have the latest update on our specific sector, and most importantly, we will also share our latest stock preference. So during this webcast, you can send us questions at any time from Ask a Question text box. So now let's start the webcast today. Let's pass it to Wataki-san. Wataki-san, please.
Good morning. I'm Tetsuya Wadaki. I cover Japanese semiconductor production equipment sector. And today, Nikkei Veritas announced that I become number 1 in precision and SP sector in Japan analyst ranking. Thank you for your support. Because of your strong support, I can get number 1 position in Excel ranking, Veritas Japanese SP sector, Veritas AIC. I promise to contribute your jobs more. Yes, let's start. This week, as usual, Japanese SP market have several changes and several big changes. And first, I changed our rating of screen to overweight and downgraded to Tokyo Electron to equal weight without any changes of earnings forecast on target price. And this is messages. Now we should pick up back-end equipment, not front equipment soon. And strong recovery will not come soon. And I pick up screen. This is because lower variation and better business environment. This month, I visit several parts supplier of SP maker in Japan. So I calculated current this first half's average factory utilization of each company's main product. Applied materials is almost 70%, and Kokusai only 56%. Tokyo Electron's etcher only 48%. These two companies' peak was 2022. It is a peak year of 3D NAND CapEx. And 3D NAND, there are some signs of the SSD modules price recovery. So we think market will bottom out. But this price up are result of the production cut. So CapEx will not recover soon. And better product and best product is a screen's single layer cleaning system. Factory utilization is 86%. Tokyo Electron's quota developer 82, CMP 77. So I recommend on screen now. Based on my supply chain check, screen's factory work full utilization until this December. Their business environment is much better than other. And the second changes is panel level packages. TSMC already announced that they will use panel level package technologies for their cores, but they did not start the CapEx yet. But recently, TSMC gave the meaningful volume of the inquiries to each SP maker. I heard these changes from Screen, Canon, Disco, and so on. Why TSMC changed their policy is they changed technologies for PLP. Their official comment, substrate size is 500 millimeter square. But TSMC changed this size much smaller than 500 millimeter, so they can solve the depth of focus problem or uniformity problem. So I think panel level packages will bring the meaningful impact to Disco and Screen's earnings. Screen says that they can achieve earnings growth in next fiscal year, not only semiconductor equipment, but also panel level package equipment. And the second topic is Micron's CapEx. Micron announced that they will start the CapEx in Micron Japan by big volumes. And Micron uses several unique equipment. For example, Micron is Nikon's ARF drive user. Micron use ARF drive for double patterning. So if Micron starts the CapEx, it is positive for Nikon. But my friend in Nikon said, we are about to die. Why is that? We have no jobs now. So Nikon's situation is really miserable. And Intel's CapEx, Intel says that they will push out Ohio factory building 5 years. What 5 years? So essentially, it is cancer. And TSMC will support the Intel. But every joint venture and semiconductor company could not survive. So it is very difficult to handle the joint venture companies. So I think this CapEx is positive for Japanese SP maker, but there are no sustainability that I think. And many news sources say that Intel's 18A will push out again. Yeah, everyone thinks so. And Disco, currently a top pick. We should buy Disco as soon as possible. This is because HBM's CapEx would be higher than consensus. Micron's planned capacity of HBM in this year end will become almost the same as Samsung. And Hynix, today's newspaper says Hynix increases their HBM capex plan in this year, 60% from year first plan. That several Korean newspapers said. So I think this cause business environment will change. Early this month, President says that factory utilization will become only 90% from 100%, and the demand of the HBM equipment become weaker. But we think the situation will change. And advanced, Teradyne revised down their guidance. Reason is every tester, automotive, factory automation, compute, mobile become weaker. But Advantage have a CEO meeting next day of Teradyne IR Day. They clearly say there are no signs of the slowing down. So I do not change our view of Advantage. And Tokyo Electron, good news is they got the POR from Samsung. But we believe that Kyokusha will buy Lam's cryo-etcher. It is not good for Tokyo Electron, but Tokyo Electron, the penetration to Samsung is great success of this company. So I did not change our higher target prices of this company. Thank you. I pass to the next analyst.
Thank you very much, Wataki-san. So next, let's have Daniel to talk about his recent upgrade on Winbang. Daniel, please.
Sure. Thanks, Sharon. Good morning, everyone. This is Daniel from Greater China Semi team. Together with Charlie, we are turning more positive on some of the memory names in Taiwan. Charlie upgraded Bison last week. And from my side, upgrade Winbang with a price target $25 in the next 6 to 12 months. So a couple of things we want to highlight. First, we are turning more positive on a consumer NAND. I think we have been equally on Bison for the past several months, mainly because of the NAND downtrend. However, right now we are seeing the consumer NAND market, the pricing will go up. I think it's a combination of the less supply plus some new applications for the consumer NAND. For example, we do see that there are some customers are running a DeepSeek based on the very low end SSD in China. That's a very new application and partially due to the heavy cache storage. So I think that's on the consumer NAND side. I think for Bison, the chairman also talked about 10% pricing hike in second quarter. Regarding Winbang, we are also turning more positive. The key reason is because we are seeing the company is making progress on the wafer-on-wafer technologies. To recall, I think most of the mainstream memory makers, Samsung, Micron, Hynix, they are focusing on HBM. It's for the cloud market, high bandwidth, high density, but also very expensive. On the other hand, there's another market focusing on edge AI, but also need high bandwidth given the AI inference. However, the key bottleneck here is the cost, because on the edge side, no matter AI smartphone, AI PC, or smartwatches, smart glasses, we cannot use HBM because it's too expensive. Die size is also too big. So one of the key solution here is a wafer-on-wafer, 3D stacking memory. For Winbang, we believe the company is making progress. We believe they are collaborating with TSMC to tap into edge market, including AI PC, AI smartphone, and smartwatches, smart glasses. We also believe there are big customers are looking at these solutions, looking at Winbang, and we believe their technology is already mature at 2-layer memory stacking on top of TSMC's logic. So on this business, we focus, it will show very strong CAGR, high double-digit growth in the next 3 years. I think the company already talked about some revenue contribution. It's from the US customer. And I think in the next 2 years, we are going to see big US customers, new customers from SoC companies becoming new customers and contributing meaningfully next 2 years. The revenue contribution could be double-digit by 2 years. And we do see this is a re-rating opportunity, which is the reason why we are turning more positive on Winbang. So just a very short summary on here, and I will pass back to Sharon.
Great. Thank you, Daniel. So let's change the gear a little bit. Let's change it to AI hardware. So the team here will share a bit about the key takeaways from recent earnings and also our latest stock preference. The overall view here is that we think the overall the GB200 server rack shipment has been kicked off. As highlighted by Hon Hai at its earnings call last Friday, they mentioned that they will be able to do volume production in March. So that's why they expect their AI server-related revenue to grow quarter by quarter from Q1. They also highlighted that they started to do some early project engagement for GB300 rack design, but just the spec probably still takes some time to finalize. So at their end, they are not sure about when the GB300 server rack shipments will kick off, but they are sure they will be able to stay as one of the key ODMs for GB300 server rack. So definitely we think the overall fundamental looks pretty intact, but just we are also aware of that the market has a pretty split view or pretty mixed view about the overall AI development. That includes the debates between AI GPU versus AI ASIC, also the debates about the potential demand between AI training versus inference. Not to mention that the potential competition across different AI supply chain from GB200 to GB300. So even we see the strong outlook guidance from most of the supply chain we talk to, but we just feel that the overall market confidence or the interest level for AI supply chain become much more rational, especially after the recent de-risk. So the top-down view, the top-down suggestion from us is that we think it's better to go with AI server components over AI ODMs, especially for those components that continuously to show the design upgrade potential and also the supplies that is able to see the share gain. So that's the overall top-down view here. So for some details, I want to highlight two things. One is on iPhone specific, because I think last week after the Apple mentioned that they are going to delay Siri upgrade, a lot of questions related to the iPhone demand potential. Our Apple analyst Eric Uring officially revised down his iPhone shipment estimate for this year and the next year. Basically, it's mainly because the reason for consumers to replace the new iPhone is because of Siri upgrade. This is from our Alpha-White survey back to late last year. So now that the Siri upgrade has been delayed, we also see potential pushback of the iPhone replacement demand. So that's the reason why we are now looking for the overall iPhone shipment this year for calendar year 2025. The shipment to be somewhere around 230 million units. Next year probably will be around 245 million units, but it really depends on when the Siri upgrade will be coming up. At this note, we also introduced our recent iPhone build estimates. We actually see a bit different developments here. For Q1, we see better than expected iPhone build. For Q1, we now expect the total iPhone builds to be 50 million units. It's 2 million units better than our previous expectation, but we do believe this is not a reflection of demand increase. This is more a early preparation for tariff increase. So for Q2 build, we estimate it's going to be around 41 million units. It's about 5% year-over-year increase, mainly because of the iPhone 16e still at the mode of stocking. But whether the early build of January and then February will come in at the expense of the second quarter build, we need to monitor the development. But just all in all, looks like the demand still stay pretty muted for first half of the year. And then regarding the recent stock preference, last week I also moved my top pick idea to Delta Electronics from Hon Hai. This is consistent with our top-down view that we would prefer AI server components. For Delta, we do believe that their technology leadership in power solution will continue to benefit from the power demand upgrade, especially for GB300 and potentially for Rubin. And also, most importantly, Delta also grow its liquid cooling offering. They have 6% revenue contribution from liquid cooling offering in January and February. So that's incremental. So that means for Delta, I think the market still underestimate its revenue contribution from AI server related. Our revised revenue estimates for 2025 suggest a 5% higher than consensus estimates. So that's also the reason why we raised our price target to $535 and move it to our top idea. Before I hand it over to Howard, let me quickly go through ABC. I think that the market has concern about the slower than expected liquid cooling adoption because of the AI ASIC design, and also concern about much more supplies get qualified by NVIDIA for upcoming GB300. So that's why ABC share price get corrected by more than 20% since late December. But we think that actually the company's fundamental remains pretty strong. We do believe that they should be able to do at least $30 EPS this year. And potentially we'll still see some earnings upside given that their dominant supply for corporate module and the VC that goes to GPU server as well as AI ASIC server. So this is the stock that we continue to like it. We understand there are some market concern about it, but once they report the earnings for Q1, we do believe that there will be another wave of the earnings upgrade for ABC. So that's why we still like it at this level. So let me pass it to Howard to go through some of his recent takeaway and the stock ideas. Howard, please.
Okay. Thank you, Sharon. Hi, everyone. My name is Howard. So a couple things to share with you guys. The first is on WeWin. Right now, WeWin is the top pick within my coverage. We believe the recent concerns in the share price pullback has been well addressed by the management on the earnings call 2 Fridays ago. So with the stock pulling back from 2,600, 2,700 level to below 2,000, there were a couple of concerns that investors were worried about, but primarily around tariffs and how that impacts margins, but also about the share loss. So on the earnings call, management said that Basically, in terms of tariffs, right now they still have a lot of customers that want them to continue to produce in Mexico. But in terms of tariffs, they will not have to take on any of the burden themselves. 100% of the impact will be paid for by the customer. And so there will be zero margin impact for them whatsoever. So I feel like that is quite straightforward. And so there's nothing to worry about on the margin front. The other thing that investors worry about is because right now WeWin has about 70 to 80% of production done in Mexico. They don't have any production inside the U.S. And so there was worry that customers would ship orders away from WeWin to their competitors. But management on the call said that in the past couple of weeks, they have not seen any changes in terms of their end demand forecast. And so I think that addresses that concern, plus the fact that there were also recent worries that there were downward revisions for Trainium 2 from AWS. I think that, basically addresses both of these concerns. So I feel like, the stock has pulled back a lot on these concerns. Management addressed them on the call. At the current level, which is less than 12 times PE, risk reward looks very attractive, and I don't think there's any downside from here. And so this is the main reason for why this is a top pick within my coverage. The other stock that we want to highlight is Gold Circuit. So Gold Circuit, previously we lowered our price target back in, I think, the second week of January, mainly because of concerns around yield issues for 800G PCB that would impact margins. So we did see that come through in Q4. Their gross margin in Q4 dipped quite materially to below 26%. But we are seeing yield improvements. And so we are expecting Q1 gross margin to expand to above 29% as yield rate for 800G PCB continues to improve. At the same time, we're also seeing stronger than expected demand for Trainium 2 PCB. So for Gold Circuit, they only started to ship Trainium 2 PCB in Q1. And this is the main reason for why monthly revenue year to date has been so strong. And so we also did raise our Q1 revenue forecast off the back of that. I think for investors, they have this concern that GCE is a big capacity constraint, but their Thailand facility continues to ramp up nicely. So we will start to see some contributions in Q3 this year. And over the next couple of quarters going into the second half of next year, we will continue to see Thailand capacity ramp up. So when all is said and done, Thailand, when everything is ramped up fully, can contribute about 1.8 billion NT dollar on a monthly basis. And their monthly run rate right now is about 3.8 billion. So it can add close to 50% on a monthly basis by the second half of next year. So I feel like that should alleviate some concerns from investors around capacity constraint. But also in the near term, there is some new capacity in Taiwan that they're adding. And at the same time, they are also seeing more and more customers willing to move some production to their factory in China in Suzhou. So even though Thailand doesn't open up in Q3, I think there's still potential for monthly revenues to continue to edge up higher in the near term as they continue to optimize their production capacity in Taiwan as well as in Suzhou. So we raised our price target for Gold Circuit to 280 and reiterate over on the stock. Valuation right now less than 13 times PE we feel is relatively cheap. And this is a company that is well positioned for both general server, AI server, as well as high-end networking PCB. And so this is why we continue to like this stock as well. The last thing we want to share is on the PC side. So we recently introduced our notebook shipment forecast. So for Q2, first is on Q1. The February shipment came in a little bit below expected, and so we lowered our Q1 builds by around 2%. Seems like the pull-in ahead of tariffs is a bit weaker than what we initially had expected. But nonetheless, Q1 should still be above seasonality off of a low base in Q4, but also off of the tariff pull-in. But when we look out into Q2, we think Q2 builds will be below seasonality. So historically, Q2 builds is up 10 to 15% QOQ. But when we talk to the ODMs, most of the ODMs are not willing to provide a quantitative guidance, and they said visibility is relatively limited. And so we are now modeling Q2 builds only up around 9% QOQ, so slightly below historical seasonality. We think the majority of the material increase in terms of builds will still happen in the second half of this year, ahead of the Windows 11 upgrade. But Q2, off of a high base in Q1, will likely come in below seasonal. The last thing we want to update on the PC side is on graphics cards. So we are starting to see the new RTX 5000 series graphics cards ramp up. This will be beneficial to ASUS and Gigabyte under our coverage. And from a margin perspective, MSI, which we don't cover, had an analyst meeting last Friday, but they mentioned that usually in terms of new product, gross margin is 5 percentage points higher than the legacy product. So we do expect both ASUS and Gigabyte to benefit from increased ASP, but also increased margin for the graphics card business starting from mid to late Q1. And for Q2, they should be able to benefit for the entire quarter. So we're overweight both of these names. So that's it for me, and I'll pass it back to Sharon.
Yeah, great. Thank you, Howard. Let's pass it to Derek for his new initiation on BizLink. Derek, please.
Okay, thanks, Sharon. Good morning, everyone. This is Derek. So today I'll talk about BizLink and Acton. So for BizLink, we initiated coverage last week, and we believe that its growth will be driven by AI deployment and its share gains in the supply chain. This will lead to a 17% CAGR on the top line and 39% CAGR on the operating profit in the coming 2 years. So the first growth driver is AEC, or active electric cable, which leverages the reliable copper with an additional retimer IC to restore the data integrity amid high-speed transmission. And this business will grow with a meaningful volume increase in ASIC servers this year, as well as the potential penetration into GPU servers. So we expect its AEC revenue to grow at an over 100% CAGR in the coming 2 years to account for 9% of its total revenue in 2026. And the second driver will be the cable and components for power and data transmission into GB200 servers. The dollar content per rack could be up to $14,000, and we assume BizLink to take a 35% share allocation. So this business has almost no revenue in 2024, but we expect it to contribute around 10% of the total revenue in 2026. And then the third driver is the power cable and submodule assembly for the semi-cap equipment vendors like Lam Research, KLA, AMAT, and ASML. On top of the organic growth, it has acquired a subsidiary in late 2024, and the consolidation of that entity alone could increase the segment revenue by 40% incrementally. So right now we are modeling for around 40% CAGR for this business, to reach about 15% of its total revenue in 2026. And lastly, since all the three major drivers that we mentioned above are carrying higher than average gross margin, we expect its gross margin and operating margin to expand to 30.9% and 16.9% in 2026 versus 28.2% and 12.1% in 2024. So putting all these together, we model for as I mentioned, we model for a 17% revenue CAGR and 39% operating profit CAGR in the coming 2 years. And we set the price target at $900 NT based on 23 times 2025 PE, which we think could be justified by our estimate of operating profit CAGR. And with the current valuation at only 14 times PE, we see pretty good upside from here. And we believe that the GTC event this week could be the near-term catalyst for the share price. So that's for BizLink. And for Acton, the company released its 4Q results last week. I think 4Q core earnings were largely in line with expectations, with a gross margin at 20.7% and operating margin at 13.3%. And for the first quarter, we now expect the revenue to be flat QOQ, better than the seasonality of down 10 to 15% QOQ. And we think that is flat QOQ is at the higher end of the recent market expectations for the first quarter revenue. On the gross margin and operating margin side, we think that it should be roughly flat QOQ. And for the full year in 2025, we are modeling for a 40% revenue CAGR and over 50% operating profit CAGR on a slightly better gross margin and some operating leverage. And so for the AI accelerator module business, it will benefit from the meaningful ramp this year from AWS, and also the yield should continue to improve gradually in the coming few quarters. So we estimate its AI accelerator module business to account for 40 to 45% of its total revenue this year versus 25 to 30% in 2024. And for the network switch business, 800 gig will see wider adoption among hyperscalers this year, but 400 gig should also hold up relatively well. And in addition to AWS, we think that you will get more traction in another hyperscaler in maybe second half this year. So overall, we maintain our positive view on Acton for its exposure in the ASIC AI space. And if we look at the fundamentals in 2025, it's actually stronger now versus 3 months ago. And so we believe that the recent share price concern, or the share loss concern at its AI accelerator module business is overdone. And we stay constructive on the name, and we now have the price target at $880 NT based on 29 times 2025 PE. This is slightly lower than our previous target multiple of 31 times because we bake in a little bit of conservative sentiment in the market for the overall AI praise. So that's the update on me. Let me pass it back to Sharon.
Thank you, Derek. In the interest of time, we have to close the webcast today. But thank you very much for your time today. We will have our weekly TMT webcast every Tuesday at 11 o'clock. Thank you for your time, and hope to see you next week. Thank you.